I'm good.
Good.
How are you?
Happy New Year. So Michael just laid out the idea that a lot of the rally may be sort of front-loading the presumption that the economy is going to achieve a soft landing. Do you agree with that? And I do note that you believe that a soft landing is what is playing out in front of us.
There's no question that we're seeing a soft landing right this moment. What happens in the next 6 to 8, 12 months from now is obviously the biggest question. But I do think that the surprise all of last year, Tyler, was the resiliency in the economy. Last week, we got more proof of it, not only in jobs, but we actually got factory orders and durable good orders. CapEx numbers were actually better than expected. And we know inflation is coming down. All right, wages are a little sticky, but they're down from their peaks. And the CPI number is going to be very big this week when it gets reported. To add it all up, I kind of have like 3 takeaways. One, the strength in the economy is going to mean that the Fed probably doesn't cut as much. Maybe it's 3, I don't know, it's 3, 4, whatever the number is. But I think that's starting to get priced in, and that's because the inflation number does remain a little sticky. But also, I think that better growth means better earnings, and the better job numbers mean better consumer, and consumer is 75% of U.S. GDP. So all 3 of those things, I think, are very healthy. Yes, maybe we did pull in, to Mike's point, on the soft landing thesis to the markets overall, but I do think earnings are going to be better than expected, and so therefore, not only are going to continue to see kind of the market grind higher, but also broadening out. And we've been seeing it broaden out. Don't give up on tech, but also look at some of these other names that have been beaten down that will also participate on that earnings story.
Steph, 2 sectors that pique my interest right now. One is energy because it's behaving so poorly all of a sudden, and you'd think there'd be plenty of catalysts to move higher, and maybe putting too much on the commodity versus the stocks. The other is healthcare and this stream of deal. I mean, you pointed it out, right? How much deal making have we had there over the past year? Feels like maybe a near-term negative for the buyers, maybe, but what they kind of have to do in the long run.
On the healthcare side, it's so exciting, right? Because this sector has been dead.
Biotech,
over the last year.
Biotech Twitter is like all a buzz. Everyone's trying to find the next, big one now.
I know. I'm just trying to find the ones that are making the acquisitions, that are building on their pipelines, that are going to be able to facilitate long-term growth. And the stocks, all of them, maybe exception is Lilly, but that's a different animal. But there's almost all of the pharmaceutical companies are super cheap. Bristol is a name that I recently I bought, and I've been buying. And they've done, Kelly, they've done $115 billion of M&A since 2019.
Wow.
And it's gone unnoticed. Now, they have to because
$115 billion of M&A in 4 years? That's insane.
Yep. Yes, well, they have to because they have a lot of products that are going off patent. But they are building, and it's kind of like it's gone unnoticed. And the stock trades at 7 times earnings. They have a lot of free cash flow, as you know, because they're doing all these deals. And they have an ROE of 25%. So these are the companies that's kind of left for dead, and I kind of think it's exciting. But then today we had 3 deals announced also. So it just keeps on growing and building, and that's why I think that sector is super exciting for this year, especially since it's lagged for a while.